When it comes to investing your money, one of the biggest dilemma is where to invest. Today, I'm going to talk about two of the most talked about investment options, and I'm going to try and dig deep into the pros and cons. Now, I'm not going to be the one to tell you which one is better over the other because that's a personal choice and it depends on your investment style, your goals, your risk tolerance. Now, before I begin, it would mean a whole lot to me if you could please subscribe to the channel. I'm trying to build a community of the people interested in Canadian real estate, and I would love for the amazing people like you to join this community. I'm gonna give you my top 3 tips for investing, so make sure to stick till the end. So now let's get into it. Now, one of the key difference in buying stocks versus real estate is that when you buy stocks, you buy a piece of that company. You grow your money in 2 ways. The value of the stocks go up and you earn dividend on the stocks that you own. With real estate, you own a tangible asset like a house or a land. Most real estate investors make money through real estate. Now the question is how? The value of the house goes up. The incoming rent is a passive income. You can leverage real estate to expand your investment portfolio even if you do not have enough money in your bank account. Most people refinance their homes or use HELOC, which is a home equity line of credit, to cash out their equity in their existing house to be able to buy another investment property. You cannot do that with stocks. Now let's talk about ROI. Investing in stocks can be very unpredictable as compared to investing in real estate. Only because real estate gives you the benefit to leverage your return on the price of the property and not just the amount that you invested. What do I mean by that? Let's say you have $30,000. You invest them in stocks. You get 8% return. That is $2,400. Now, how about if you use this same money to pay a 5% down on a $600,000 house? That same 8% return is $48,000. Now let's talk about the risks. Real estate is not a liquid investment. When you're investing money in real estate, think of it as a long-term investment to grow your money. If you want to make quick money, real estate is not a good option for you. Just because there is cost involved in acquiring and selling real estate, which is not going to make sense if you have not held on to your property for the long term. As a landlord, you might want to have a contractor just in case an issue arises in your rental unit. Stocks, on the other hand, are subject to the risks such as stock exchange, economy, and inflation. In the beginning of the pandemic, stock market worldwide crashed due to the instability. With stocks, if you're relying on one company's share to grow your investment portfolio, and just in case if the stock market goes down, you may end up losing all your money. Now let's talk about some pros and cons of real estate. I'll start with the pros first. Real estate is a long-term investment. If you keep your home for a long term, it is going to give you good returns. You can leverage real estate to grow your investment, not just the amount that you invested. Real estate lets you leverage the whole amount of the property. With real estate, you are able to generate passive income just by putting a small down payment. In some of the programs, even the government will give you tax benefits. Now, real estate is a very secure investment. Even if the market goes down, you still own your house. And if you hold it long term, things will make sense for you and you will make good money. And lastly, people buy real estate to build their lifestyle. You can buy a house that suits your lifestyle. On the negative side, in a crazy market, the buyers are forced to compete with another buyers to be able to get the house, and in many of the cases they are forced to pay high prices just to acquire that house. In order to afford a house, you are required to pay the minimum down payment and closing cost. You need to have that money ready in your bank account even before you've started looking at the houses. Now this can be a big amount for some people. You own a big debt along with that house that you will need to pay down during your life. And owning real estate is expensive. Let's talk about stocks now. On the positive side, stocks are more liquid investment. In case in an emergency, if you need money, you can quickly sell your shares and cash out. You don't need a whole lot of money. You can start investing with a very small amount and you can keep growing as you go. It is easy to diversify your portfolio by buying stocks of different companies. Also, you do not need to spend a lot of time managing stocks, so it's less time consuming and less work. On the flip side, stocks are very volatile. One day your $50 stock may be riding high at $75 and the next day it may plummet to $10. It is very hard to predict stock market, so it's very much possible that you sold all the stocks one day and the next day they rise up. Money made from stock is subject to big taxes. Now, in the end, I would like to say that stocks and real estate have their own pros and cons, and it would be very best if you can analyze your own financial situation and make a decision that works best for you. Now, here comes my top 3 tips for investing. Number 1 is diversify. The smart way of investing is to not put all your eggs in one basket and diversify as much as possible. If you already own real estate and investment properties and you have some money left that you want to invest, you might want to invest them in stocks, but make sure you are buying stocks from different companies, just so if you happen to have a loss on one side, you are able to recover that somewhere else. It is very important to set a monthly or an yearly goal for investing and work towards it. Going without a goal would be like walking in the dark. You don't know where you're gonna end up. And lastly, automate your savings. You need to set an automatic transfer from your account to a separate bank account the day you get your paycheck. This way, you have saved money before spending it. Now, I hope you got some value out of this video. If so, please hit the like button for the YouTube algorithm and subscribe to the channel. I'll see you all in the next video.